Hi there. In this market update, I want to explain what the latest property changes mean for apartment owners, investors, and buyers across the inner city apartment market. There is no doubt the market is adjusting. Buyer confidence has softened, investors are being more careful, and properties are generally taking longer to sell. Buyers also have more choice, which means pricing and presentation are now more important than they ever have been for some time. But there are also some very real positives. Melbourne apartments remain incredibly affordable compared with most other major Australian cities. More importantly, established apartments throughout our core market remain incredibly well priced and are absolutely below the replacement cost of an equivalent new apartment. The cost of construction has increased significantly. Developers are also dealing with higher land values, finance costs, taxes, and planning delays. This means new apartment projects need to achieve much higher prices simply to be financially viable. That creates a significant gap between the price of established apartments and the cost of delivering new ones. We do not believe that gap can continue forever. If new apartments cannot be supplied at prices close to the established market, then over time, the shortage of new housing should help support and pull established apartment values higher. For first home buyers and owner-occupiers, the current market may be a genuine opportunity. There is more choice, less competition, and often more room to negotiate. Buyers may now be able to secure a larger apartment or a better located property than they could have only a short time ago. For investors, the strategy may change, but the reasons to own an apartment remain incredibly strong. Inner city apartments continue to offer excellent rental returns, strong tenant demand, low maintenance, and relatively low vacancy. Many apartments are already neutrally or positively geared, which means investors are not always relying on capital gains or tax benefit to make the numbers work. There is also a risk that fewer investors will mean fewer rental properties. If rental supply continues to shorten, rents could rise further. That might be difficult for tenants, but for investors who are in there and own quality apartments, it means it's very, very strong. For sellers, this is a market where the right strategy matters. Buyers are selective, but well-presented, correctly priced apartments are still selling. Natural light, good floor plans, views, car parking, and well-managed buildings remain incredibly sought after. Our view is positive, but it's realistic. There may be some short-term volatility, but Melbourne remains undervalued. Rental demand is strong, and new apartment supply remains extremely difficult and expensive to deliver. Whether you are buying, selling, investing, or simply reviewing your current position, good advice matters now more than ever. Speak with the team at Lucas Real Estate for an honest assessment of your property and the opportunities available in today's inner city apartment market. Thanks for watching, and we look forward to seeing you at an open for inspection soon.